Sage here for Kalkine Media. Please subscribe to the channel and press the bell icon to be notified of the latest videos. Today we're covering an interesting topic, decoding RSI. What is relative strength index and how is it used? When it comes to gauging the momentum of a security, there are many indicators available, such as Commodity Channel Index or CCI, Stochastic Oscillator, Rate of Change or ROC, etc. However, one indicator, the Relative Strength Index or RSI, introduced in June 1978 by J. Wells Wilder, is probably the most popular amongst all of them. And just like other oscillators, RSI oscillates between upper and lower bounds, 0 and 100 respectively, to indicate overbought, oversold levels. The indicator is based on the assumption that after a significant advance in a relatively short span of time, the security tends to become overbought and hence is poised for a correction. And similarly, when a security has fallen sharply in a short span, it tends to become oversold, indicating the likelihood of a bounce back. How is RSI calculated? The indicator simply measures the strength of a security against its history of price change by comparing up days, when price has increased compared to the previous day, to down days, when price has decreased compared to the previous day. So to calculate RSI on gains, you take the sum of the gains over the selected time frame and divide it by that specific time frame. The same formula is used to calculate the RSI for losses. RS is calculated by taking the amount of gains and dividing it by the losses. So all in all, RSI is calculated by finding the RS number, calculated by gains divided by losses, adding the number by 1, and then finding how many times that number can be divided into 100. Finally, you take that full number away from 100. To see more of this information, you can head to our website, kalkinemedia.com, and look at the formula there. How to make decisions with RSI. Overbought, oversold zones. As the RSI measures the intensity with which a security has risen or fallen, it is up to the user to decide the RSI levels where he would consider the security to be overbought or oversold. And traditionally these levels are below 30 for oversold and above 70 for overbought. However, they can be modified to 20 and 80 as well, or any other level as per the analyst. Interpreting signals generated by the RSI is quite simple. Whenever RSI rises above 30, it is interpreted as a buy signal. And similarly, when the RSI falls below 70, it is taken as a signal of weakness and hence a sell signal. This is the most common use of the RSI. However, with RSI being a very versatile indicator, there are quite a few ways to interpret this indicator. Trend identification. Although the RSI is not a trend following indicator, some analysts keep a close eye on level 50 being a midpoint of the entire range. It also helps to figure out the current bias of direction of the security. If RSI is below 30, the trend could be interpreted as negative, and above 50, a positive trend. Helps to spot divergence. Indicators which are based on price, or in other words, are derivatives of price, should move in tandem with the price, which is the case most often, but sometimes the indicator does not follow the price quite precisely and tends to diverge. And this disagreement between the price and its indicator is called a divergence and is often an indication of a reversal. A bearish divergence occurs when the price makes two consecutive higher highs, but the indicator's second high falls to breach the preceding high. Similarly, a bullish divergence occurs when the price makes two consecutive lower lows, but the indicator fails to replicate that. And the RSI is very commonly used to spot these divergences, to catch short-term tops and bottoms, or to do mean reversion trading. Failure swings. Another popular way the RSI generates an actionable signal is through a failure swing. A failure swing occurs when the RSI and price diverge from each other. In an upswing, the price hits a new high and the RSI turns from the overbought levels. As the price surges further, the RSI fails to cross the previous peak and turns down once again. And however, this time the RSI breaks the low made during the previous swing, which is a sign of weakness. And the exact opposite scenario occurs during a bearish move. This signal is also interpreted as a reversal signal. Patterns in RSI. One increasingly popular and highly effective method to interpret RSI is to draw some patterns, trend lines and support and resistance levels, etc., as being traditionally drawn in the price chart. For example, a trendline breakout in RSI is interpreted in the same way as a trendline breakout on a price chart with same implications. Other examples could be RSI bouncing off a strong support level. That levels could be given a high relevance and may be interpreted as a sell signal if that support level gets breached. Ideal market conditions to use RSI. Just as with other oscillators, the RSI also requires a favourable market condition to be more effective and might not work in every market environment. And being an oscillator, the RSI works best in a range-bound market or a consolidation phase where the security is bouncing off between an established support and resistance level. And this is an ideal condition to use the RSI to attempt to catch these reversal points in the range. However, if the market or security is trending either up or down, the RSI could easily fall prey to false signals, and the simple reason being when the market is strongly trending, the RSI would generate the overbought or oversold zones and give a sell signal on correction in a bull market and a buy signal on rallies in a bear market. However, most of the time the corrections in a bull run are just an opportunity to buy and not to take a short call at the top. Similarly, trying to catch a bottom in a bear market, considering it as oversold, generally doesn't pay well. Therefore, the use of RSI should be avoided during a strong trend. Thanks for joining us on this report. If you like this information, please like, share and comment on the video below and subscribe to the YouTube channel. Press the bell icon to be notified of the latest videos, and for more information and regular updates, head to the website kalkinemedia.com, where you'll also find the formulas in image form for you. Sage here for Kalkine Media.